Hello, I'm Stewart. He's CEO and founder of Harvard Grace Capital with rule number 10. We've gone through this entire series now of our rules for investing in commercial real estate. Today is the last one. I hope this series has been helpful for you. And to me, this is the most basic one. It's the foundation that supports them all. Set your investment thesis and stick to it. The most common thing that happens to any new investor, and they get out and they take a risk, they're terrified, they think through it, they analyze it, they take a risk and it works. And then they immediately start looking at every other shiny object and think, oh, that looks like a good deal. And the fact of the matter is, there are thousands of great opportunities out there. It doesn't mean they're all right for you. In particular, our investment thesis is simple. We buy stabilized commercial real estate in various asset classes in geographies that we know and like, and we buy them at a rate that will pay our investors a cash-on-cash return of a minimum of 5% or better from year one, and with an expectation that it will grow from there. Period. That's our investment thesis. And what that means is I don't do development. I don't do value adds. I don't do some property that is in a great location but needs $5 million worth of work to get it up to market. I generally don't do raw land, although I've done some things that have some land attached to it. And you know, that is our thesis. I'm not saying that thesis is right for you. That is the thesis that Harvard Grace Capital has adopted. And every time, and I'm not immune to shiny objects, every time I start chasing something else that I really, really like, and I start trying to twist it and contort it to fit into our thesis, the numbers never work for what our investors have come to expect from us. So for you as Mr. Investor, set your thesis. Do you want to buy raw land? There's a great investment case to be made for buying raw land. The one thing you know, it's not going to cash flow. So you will be feeding the property taxes and perhaps the mowing for years to come, which is not insurmountable, but just know. But you know, you buy raw land in the right place, and it can you can do virtually nothing to it, and it will just simply you know, perhaps be 10 times the money that you paid for it. That's one investment thesis. Development. You're going to buy raw land and put commercial buildings and housing on it. Yeah, there's a lot of risk in that. It takes debt, it takes capital, it takes time, and that market goes up and down generally with the availability of financing. So you know, there's risk to that. So know your thesis, stick to it. You can have multiple theses along the way, but you know, developing your thesis requires you to sit down, work through what it is you actually want to accomplish. And actually, you might create a thesis that actually doesn't work. So you'll have to come back and edit your thesis from time to time. But once you've developed it, stick to it, and you will have success. And you will always hear about, well, so-and-so just did this and made a great return, and you can get jealous. But stay focused, do your thing, and you will succeed. Stick to your thesis. Thanks for watching our 10 rules for investing in commercial real estate. We would love to have a conversation with you if we can be of any help to you at all. Thanks for watching, everybody.